Hey, this is Danielle. In today's trade review video, I'm going to be going over Netflix. Netflix is a stock I've been talking about a lot over the course of the past couple of months because it has relative strength, which makes it a great candidate for trading. Because, typically when you have a stock that has relative strength, you can just continue trading these moves as it, you know, continues coming up, making new all-time highs. And that's exactly what I did with this one. So, if you check out my newsletter, you can see that last week I posted right here bullish trade in Netflix, and this is actually going to be the trade that I'm doing the trade review video on. So let's go ahead and get started. So I had posted that I was going to be trading Netflix because it has these multi-time frame squeezes. It has a squeeze on the daily chart, it has squeeze on the 195-minute chart, also has lower time frame squeezes as well. I had set up my butterflies so that they were going to be targeting 7:30, and today we came just below that price target. Today it hit 728.21, which is great because I've been waiting for it to break through 725, which is where that previous area of resistance was. We also have an earnings report coming up on Netflix, which can tend to provide a little bit of a boost in that stock price ahead of that event. So that was pretty good. But more than anything, it's just about relative strength. If you look at a lot of the other Magnificent Seven stocks, for example, Microsoft, one of my favorites, it's all the way down here below the 200 simple, which is pretty vastly different to Netflix, which was making highs. So, anyways, let's go over the trade. If you look at the trades that I did this in two different accounts, so they're not showing up together. But this is the Netflix butterfly that I had put on. It was less than $500 for the trade. I paid $414 for one contract, and this is now doubled. It's up 110%, and I'm making $457. Now, this trade is going to expire in 2 days, and the target, as I mentioned, was 7:30, and you're trading at 7:26. So very, very close to the target. This is generally what I aim for, to get within a few days of expiration. It depends on the price of the stock, but within $5 is really good on a big stock like Netflix. If you look at the options chain, you say, why did you choose this strike? Um, you can see how this is standing out. Look at the 7:30 strike. This is the volume and the open interest. Look at that. There's 4,884 contracts of volume in that strike compared with all the other strikes that have 600, 2,000, 900, 800, 1,400. So that was just a major magnet for me. Um, is it possible that Netflix stays at 7:30 or at least goes up into 7:30 and stays there until this Friday's expiration, and I could actually get a max profit instead of a, 113%? Yes, that is possible, but what can happen in these situations is your profit can also completely evaporate. If there's some bad news tomorrow, you don't wanna lose your $470. Even worse, lose the debit that you paid, $414. So, you have almost $900 at risk if you hold it for 2 more days. So, when I was younger and a little bit more wild, I would hold them down to the wire, but the thing is Netflix still has a 14-point expected move, um, and since it broke out to a new high, it's very likely keeps going, and it trades up through the center strike and butterfly at 7:30, which you don't want because then again you start losing money. So I'm just going to take this off right here. That is how I'm managing the trade and why. Um, go ahead and take the 110%, whatever in that fly. Now, in addition to the fly, I also did a put credit spread. I normally do those in the same account, but I just didn't this time. I did the put credit spread just to bring in some premium, especially when you're paying money for a butterfly, and also sell a spread to create, generate some premium into your account. And in this case, I had sold the spread when it was trading around 710. Right now it's at 7.6. So I had sold the 710 put and had bought the 75 put. I did that for a credit of $2.25. That was for 2 contracts. So when you look at what the risk looks like, again, it's less than $500 risk because you are, uh, creating a $5 wide spread, and then you're getting premium, $2.25 per contract for 2 contracts. So you had not quite optimal risk reward ratio, but pretty close. So I sold that premium for $2.25. The idea with this is that the stock goes higher and then that pays over time. So I sold it for that and now it's worth 62 cents. And I'm up 72% on the spread, which is another, $326. So across these trades, Um, my risk was pretty low. Risk like $400 on the first one, almost $500 on the second one, and end up making, depending on where this closes, I'll probably end up making around, I don't know, 700, $800, depending on what my fill price is. So if I can get out right now, it'll be, a little bit over $800. If I want to try to squeeze out more, I could make more. There's 55 cents left in this one for 2 contracts. It's gonna be, a little bit over another $100, so I could try to squeeze out another $100 on that one. On this one, because it is a $20 wide butterfly, there's actually a lot more to be had here, uh, because it's only going for $8.75 right now, and the max that you could get out of it would be 20. So, there is a potential to make a lot more, but it's important to not be greedy, not second guess yourself. And also, if you're concerned about, wanting to make more, the other thing you can do is simply buy more than one contract and then scale out. That way, if you take off one contract, you can hold the other one, try to get, I don't know, 12, 13, $14 out of it. But anyways, this is how I'm managing the trade. No, I haven't been posting very many videos lately. I am 9 months pregnant and have a baby, so it's been a little bit crazy for me over here. But I always enjoy trading with all of you. I'm going to be out on maternity leave soon, and I'll look forward to posting pictures, videos, all that good stuff of the baby and some family time in the very near future. But you're probably not going to see me posting too many trading videos because I am going to be very busy with my newborn. So I'm going to go ahead and take these off. See if I can look at the bill. Take a screenshot first. Always like to take a screenshot and see what these things look like. Okay, see if I can get out of that one. Market is about to close here, so I do get out. Okay, so that one got filled at 57 cents. And let's see what I can get filled other than that. So this one's still working. It's at 883 now. So you can just go view orders, cancel the place. So this one's gonna be a little bit lower than what I was looking at, but not by that much. And then 876 bill. Okay, there we go. 873 bill. So should be just over about $800 of profit, which is pretty good for the amount of risk that I had. It's about 1 to 1 on the risk there, which is exactly what I aim for. Um, made like 115%, the other one 75%. So when you average all that out, make about double your money on the Netflix rates. Anyways, hope you enjoyed this video and you learned something. If you're still in Netflix, if you have something like long calls, next target, 740, and then after that, 750. Hope you have a great rest of your day, and I'll see you in the next one.